The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
As part of the Future of Money Week, CoinDesk is featuring articles exploring the varied and sometimes weird ways value will move into the future. Our next guest applauds the private sector for inventing better alternatives to fiat currencies, and that market-based cryptocurrencies should be allowed to proliferate. Joining us now to discuss his article, Let the Market Come Up with Better Money Tech, is Jim Dorn, Senior Fellow at libertarian think tank Cato Institute. Hello there, Jim. So, in your opinion, how has the U.S. fared in either helping or hindering better money?
Well, the U.S., of course, a lot different than China, where cryptocurrencies have already been banned, private cryptocurrencies. And the Fed's been very cautious in trying to introduce a digital currency itself. But I think they're on that path. They've been open to experimentation. Even 25 years ago, Alan Greenspan argued, to quote, the private sector needs flexibility to experiment without broad interference by the government. So I think that's the track to take. You need experimentation. The competition in the market process leads to discovery. And we're in a new frontier now with cryptocurrency and blockchain and DeFi and so on. And we need to leave those doors open. What we have now, we live in a fiat money world. So fundamentally, there's really no difference between the Fed printing out money and the private sector producing cryptocurrencies. They're all fiat money. So what you need institutions in which there is trust. That's why the yuan, for example, and even the digital yuan, they're not safe haven currencies because people don't trust that system. So if you gain trust and you have algorithms that can limit the supply of a cryptocurrency, similar to Bitcoin, that has promise for the future. So we have to let markets, and especially a free market for ideas, operate so that people can experiment. At the same time, you need a genuine rule of law and a system to enforce contracts and to make sure that people aren't scammed by new deals. So there is room for regulation, but I think it should be a gentle regulation, a reasoned regulation, rather than an overreaction.
So, Jim, where do stablecoins fit in with all of this? They're based on fiat currency, and the free market, in many ways, has deemed them one for one because of their asset based. Yet, we don't really know for certain, in some cases, what's in that asset base. So, should regulators at least certify or say yes, what they say is in fact what it is? Or should that also be left to the free market to determine whether or not the stablecoin issuer is telling the truth?
Well, the market would eventually find out, obviously, when things fell through. But I think there is some room. It can reduce transactions costs and increase certainty by knowing what the stablecoins are backed by and if they're fully backed. So stablecoins are a step forward in this whole market process. And it's still kind of a new frontier, so there's going to be new developments that we can't foresee right now. But unless we allow for experimentation within a rule of law and within transparency, then we won't know whether these things work or not. Right now, I maybe disagree a little bit with some of the earlier panelists. What's been pushing the market for cyber currencies, in my opinion, is the search for yield. For the last 7 years, we've had even more. We've had close to zero interest rates, and now we have negative real rates of minus 5% or so. So Bitcoin, which doesn't have any yield itself per se, promises an investment for people that can't get yield anyplace else, and it's been a very good investment for a lot of people. But you can look at Bitcoin and these other assets. They're assets. They're not so much currencies as assets, speculative assets at this point. A currency is something, money in itself is something that's a widely accepted medium of exchange. These are not used as medium of exchanges yet, but that doesn't mean they couldn't be. So somebody has to figure out how to not only limit the supply, but also have a feedback mechanism built in so that the future value is stable. So if there is a large inflation in the United States with the official currency, we need a parallel system, a system of private currencies, now digital, which people can shift into. So I think that's going to be the key thing, how we develop these institutions and institutional trust and transparency so that people have this parallel system they can shift to. Because as you know, the government has a big network and the currency is a legal tender. So you have to overcome, there's going to be a lot of opposition to private currencies, I think, for that reason. The government has a monopoly on currency, and it doesn't want to have that monopoly basically tarnished or weakened or attenuated by competition. So they're going to do everything in their power to protect it. And I think there's no doubt in my mind that we'll have central bank digital currencies very soon. I mean, China's moving already in other countries, but that's a path of the future with the COVID virus and everything. People don't want to handle cash, so digital cash is the next step. But there's risks, of course, involved in central bank digital cash. You lose privacy. There's more centralization. It politicizes. It can politicize money. So we can avoid a lot of that actually by having a stable cyber currency in terms of stable coins or some other alternative that we don't even know about right now.